with us, fund manager at InCred Asset Management. Aditya, good to have you with us here. Good afternoon. Thank you very much for your time. It is, I'm assuming, your kind of market because you're a very bottom-up, purely value investor, and the market is hungry for ideas. So, as we wrap up this year, 24, Aditya, what are two or three ideas you want to lay out, and we can sort of dive deeper into those as we head into 25?
Sure, Prashant. Thanks for having me on the show. Essentially, I think so rather than, ideas, this market, we believe, is in the middle of a reset. So if you step back and think about it, possibly we have had 12% CAGR of, earnings growth for last 10 years. Obviously, COVID being an aberration, and, post-COVID, obviously, we saw a decline in earnings growth of 25% in terms of, the EPS cut. And subsequent to that, we have seen a 25% CAGR in earnings getting delivered over last 4 odd years. Now, in that environment, obviously, a lot of stocks did well. As you are aware that, we are getting into a phase wherein, earnings have disappointed. So our focus in this market is that, if you can identify companies which are at least growing, 2x of the index earnings growth, which is more like, 22% CAGR, it should be a very, very constructive point because, market is going to be earnings growth starved for the near term, at least, next 6 to 9 months. Obviously, this kind of environment creates opportunity for bottom-up stock picking because what we have also seen is that there are certain sectors which were very, very, which had gone through, euphoric valuations, possibly, defense sector being one of them. And now we have seen normalization of these opportunities because we have seen, 30, 40, 50% correction in many names. So in a way, it is very similar. This decline is very similar to what we experienced from 2021 to 23 in the markets. Purely from a bottom-up basis, the way we are looking at this opportunity is that we are trying to identify stocks within sectors that we like, but these stocks should be trading at a, sort of a reasonable valuation. And that is where, for example, hospital as a space we have always liked, we own a couple of hospital names. But within that, I think so what we are trying to see is that, is there a price to value gap in a very fast growing sector, obviously, wherein, margins have improved over a period of time. Because, we have seen, re-rating of margins, for example, a max, we have seen, 88% odd margins moving to, 30% plus EBITDA margins over a period of time. So what we are trying to do is that, we are trying to resort to this framework of value hunting within that sector. But I must confess that there are opportunities wherein if you are investing into very high capability companies, these companies are expanding their total addressable market and earnings are also, growing exponentially. Obviously, some of these areas are, telecom equipment manufacturing in India or the manufacturing ecosystem, be it, EMS companies. So we are very, very focused towards earning growth in this environment.
All right. Hi, Aditya. Good afternoon and good to see you. I think those two calls, Indraprastha Medical Corporation and even Healthcare Global, both of them worked quite well for you. But I think you're indicating that there is further upside.
Even Tejas Networks. Aditya has been very bullish on Tejas Networks. So when he talks about the telecom equipment, I think it's Tejas.
Very good. Aditya, we're almost at the end of 2024. Some of these names have done well. We were just, talking about Stovecraft with Deepan earlier, and that's another one that you'll have in your portfolio. Give us top 2 themes for 2025 that you're looking at, stocks that can do well.
So theme number 1 is that, when we see a headline or when we see a headline in a sector, and Stovecraft being a perfect example, our focus typically is to focus on companies whether they can gain market share in a declining market. As long as companies can demonstrate, and this is what we precisely saw in the case of Stovecraft as a case in point, 385 rupees was the IPO price. 4 years back, the stock rallied to 1100. Again, the stock declined to, from 1100 to 400, which was a very, very sharp decline. But what we saw was that, they were consistently gaining market share. Now, if you look at, Stovecraft as a play, our belief is that, export is going to emerge as a very, very big opportunity for them. They already have, for example, they already have both Walmart and Asda, which is a, Walmart subsidiary in US as customers. I think so they potentially can, half of their revenue, what is today, could be, coming from, in terms of incremental growth, can come from exports. They have heavily invested into gross block. So we like companies wherein, they are past the capex phase, and then, you would see a ROC improvement going forward. As far as Indraprastha Medical is concerned, I think so, when a growth stock becomes a value stock, essentially over a period of time, what we have seen is that, virtually growth was missing for this company. 755 bed capacity they had for the longest period of time. I think so now they are getting into this capex zone. But the key that needs to be noted there is that it is one of the highest ROC hospital possibly in the world. 35% return on capital employed with 18% on margins. We believe that the margins will trend towards, more like 20%. And then over a 5-year period, they can easily expand to, 755 beds can go to 2000 beds. Now, what it essentially means is that, this 180 crore profitability that they are reporting could be easily a 400-500 crore number over 4-5-year period. Valuations are reasonable. The stock is trading at 23 times earnings. If you look at the PE multiple of the sector, hospital sector, as you are aware that, most of the hospitals are trading at 40 to 50 times trailing multiple. So we believe that, this is a very constructive value play. On Tejas Networks, it is a story of capability, and that is what I have always believed. I have not stumbled upon a small cap in my career, wherein you have got 450 patents to its name. So it is a very highly intellectual property guarded company. That leads me to also believe is that, for example, 6 months back, nobody would have thought that Tejas would have any role to play in Railway Kavach. So first, if you logically think about this, is that, this was a fiber to home wireline company. Obviously, BharatNet is something that, is very widely spoken about. But wireless is something that Tejas had never implemented in their, they had done a $10 million project for a Malaysian telecom in the past. And now they've successfully implemented the BSNL 4G, 5G implementation. And that is the reason why we are seeing, so much of subscriber addition. Nobody could have forecasted that, they would have a role to play in BharatNet. I think so. The total addressable market in the case of Tejas is expanding at a very, very rapid pace. It takes a lot of time for, most of these companies to build capabilities. Today, possibly, Tejas is a 28-year-old company. So first 25 years, they were busy, in terms of having, closely guarded intellectual property. So I think so most of these names have a long way to go from here on.
Aditya, you spoke about healthcare, hospitals in particular. There have been many recent IPOs in the allied healthcare space. So there was IKS, Suraksha, a diagnostic company focused particularly in West Bengal. Then you had Sai Life Sciences, and then many others like a MobiKwik, Vishal Mega Mart, not in healthcare, but recent IPOs. Anything which you all are interested in, where you see value?
So one of our frameworks says that, possibly the best stock that you own is already in the portfolio. So if I have to compare, Sai Life Sciences to Newland in terms of, valuations or in terms of capability, I think so, we already own Newland, I think so that is a stock wherein we are fairly constructive on. Versus a Suraksha, we own Thyrocare in the portfolio. We believe that, Thyrocare over the next 2-3 years could be the fastest growing, sort of play on the diagnostic side. The problem with IPOs generally is that, you don't know the character of management when the companies are coming for an IPO. Very limited history of, management teams, how they react to, public listing is unknown. Second thing is that, most of the IPOs are bought based on, obviously projection. And our view is that, IPOs only happen when business is doing well and the market is doing well, which is typically a boom phase in the market. So we would like to, do wait and watch. We study these companies well, but we are not really, too much inclined towards, IPO investing.
Aditya, what is Tejas? So if you had to put fresh money, if you did not own the position in Tejas you do now, and you to buy it now, would you do it again at this price?
So two rules that we use, Prashant, religiously is that, how is the risk to reward incrementally? Because PMS as a product, as you're aware that, we have to think about, incremental deployment. So that is point number one. How is the risk to reward incrementally? Second thing is that, whether we can incrementally make a 20-25% IRR on, the money which is freshly deployed. I think so clearly, Tejas qualifies. When Tata's took over Tejas, the open offer was made at 280 rupees. One of the things that we have to be mindful about is that when a corporate change event happens in a life cycle of a company, anybody who's stepping in as a new promoter is not buying the company to make a 3-5x. Possibly it is making, it is investing to get into the company and make a 30-50x over a period of time. Now, time horizons could be different, but my view is that, Tejas is going to be the best manufacturing play that comes out of India for the next decade.
Wow, that's good to hear. Aditya, you also briefly mentioned EMS and stocks are jumping. The Keynes is higher. There is that OSAT excitement around it. CG, of course, is not doing very much, but Dixon, I think, of course, that tie-up, another tie-up there. PG Electroplast is sharply up. What do you own in that space? And again, I was looking at numbers. Maybe numbers are going to be rapidly revised, but Keynes is now, I looked at, I think, Spark Avendus estimates, about 110 times earnings, FY26 earnings. Just any thoughts here, Aditya?
So we are, very, very conscious about, the valuation that we, buy into the companies, So there is a company known as Centum Electronics that is there, a part of the portfolio. So if you do the first point in EMS is that, what is the real capability of a EMS play? And for that, essentially, you have to look at the certifications that, a lot of these EMS players have over a period of time. Now, you will be surprised that, very few companies would have a NADCAP approval, for example, as a case in point. And Centum happens to be one of them. The second thing is that, which is the sectors wherein, these companies have an exposure. Why we saw a very large rally possibly over the last 1 month in Centum is essentially because, they've got exposure towards defense as a play. So we like companies wherein, aerospace and defense could be a real EMS play over a period of time, but because, we are focusing more towards, IP protection and scalability over a period of time. But again, one has to read between, there are between circles, and one has to focus on, capability and when that product life cycle coincides with, revenue generation. Another aspect of EMS, evaluating EMS plays is obviously, the inventory cycle, because a lot of these companies, and for example, anybody who's working in aerospace and defense would have a MOQ, and that leads to a bloated inventory cycle. But once you see these products getting commercialized, obviously the margins are very, very high. And as a result, it has a very significant impact on return on capital employed over a period of time.
What approval was that, Aditya, you mentioned? That most companies... What is that?
So that is a approval that you need to have if you have to, for example, supply to a Boeing or a Airbus.
Okay, which Centum has and many others don't. Got it. And Centum, by the way, I think about 14-15 months the stock did not do anything, and December has been very eventful. I think it's up 35-40% so far this month. So you got in recently, or you've been holding it for a while?
So we have been holding it for like 6 to 9 months. So one of the frameworks that we have is that, a sector which is very, very hot and valuations are very, very elevated, we'll try to see a differentiated play, but valuation is something that we won't typically end up, compromising on.
All right. Great chat, Aditya. Thank you very much for explaining all of that and your thought process, your ideas. And, if you don't speak again, have a good end of the year if you're taking a break. Appreciate it, and we'll speak again soon. I think 100 points low.